What's going on, guys? My name is Richard and welcome back to another video. Today I want to highlight Chegg Inc., which is my stock of the week, and in this video, which is sponsored by Marketsmith, we'll go through the fundamentals, the technicals, and what this business actually does to help you become a little bit more knowledgeable about this promising growth stock. And just to jump into it, we've got a brief description right here. Basically, they provide digital products and services such as online textbooks and tutoring to help foster kind of online education. And obviously, due to this current pandemic, this is becoming more and more relevant as more and more colleges are being shifted to online. And in this video, we'll go through the website first of all, then we'll jump into Marketsmith, talk about the fundamentals, the fund ownership, and then we'll round off the video by heading over to TC2000 and talk about potential buy points that I'm looking for. All right, so the first thing that I do when I'm researching a new company that I don't know much about is I Google them. And doing that, you can see that they've got a couple different components to their business. They offer online textbook solutions, books, online rentals, they've got online tutoring services, and they also have the ability to help sell your textbooks for you. So diving a little bit more into it, let's go to their website and first talking about renting textbooks. And as a college student, this is definitely something that I have to deal with every single semester. These things cost a lot of money, and being able to rent them for a reasonable price can make so much difference and literally save you hundreds of dollars. So Chegg, I think, is doing it right. They've got a relationship with Pearson to offer all their different textbooks, which are often widely used in college courses, and you kind of rent them by the semester. So you don't pay for an entire year when you only need it for just that one semester. And as they say down here, they've got excellent textbook selection. You can rent physical textbooks, purchase new or used editions, or download e-textbooks, which I've started to use more and more because it's very convenient. You don't have to wait for them to ship if you forgot until the second week of school that you actually need it. And overall, it's just a little bit easier. And as they also say down here, you also get a free 4-week trial to their online study program, which helps introduce potential clients to that space. So it's cool that they kind of pair that with their online textbook rentals. And moving on, you can see that they also offer a tutoring service in many different subjects, from engineering to math, science, humanities, high school classes, and test prep. And I think especially this one is potentially very lucrative because these tests really decide people's future. And because of that, they're willing to spend a little bit more to gain that knowledge and up their score. So I think that's potentially an interesting service for this company. And I think, once again, as more and more schools shift to online education, these tutoring services are going to become very valuable. And apart from this tutoring service and also their textbooks, the main part of their company is the subscription service to their textbook solutions. And these solutions go very in depth, step by step through problems. Definitely, I've seen it used a ton in engineering classes. And it's definitely very helpful if you're stuck on a problem or preparing for an exam. And as I said, because of the shift to online education and online textbooks, I think Chegg is well positioned to benefit from this transition. So now we've talked about the company a little bit, let's go ahead and dive deep into the numbers. And taking a look at the fundamentals in Marketsmith, the first thing that I always look at are these earnings reports the past few quarters. And overall, very good growth, up 40% last quarter, sales were up 35%, and after-tax margins were up as well, plus 22%. And then after I've looked at the recent quarterly earnings, I go ahead and check out the annual estimates, which give you an idea of future growth. And for 2020, the estimates are up 24%. In 2021, the estimates are up a further 20%, so very good growth there. And it's also significant for me that the revisions are being marked upwards, which not many companies have that going for them in 2020, and this just kind of makes Chegg stick out that much more. Going over to the EPS rating, it's a strong 99. The group RS is an A, the SMR rating is an A, accumulation distribution is an A-, and the overall composite rating is a very strong 99. So the fundamentals look great in terms of the IBD ratings, and checking out the fund ownership, we can get a sense of how funds view this company. And overall, over the past 2 years, you can see a steady growth in funds buying shares of Chegg, and you also have 5 high-quality funds investing into it as well. So I like seeing this trend. I always want to be investing in companies where this trend is going up because I want to be following the smart money, the big money. These are the institutions that actually move the market and move the stock. So if I'm buying when these funds are buying, there's just a higher chance that I'll be successful in that trade. So that is the fundamentals, and checking out the RS line, it's going right where we want to see it, upwards, and it has been pulling back recently as it's kind of been consolidating at this huge jump after earnings. But overall, the RS rating is still a strong 97, meaning that's outperformed 97% of stocks over the past year. And looking at the pattern recognition, you can see that it was recently in a stage 1 cup and handle base, and then had a consolidation period, which is also stage 1, which it just exploded out of. So I like looking at stocks that are stage 1. That means they're early on in their growth period. So those things are all promising for Chegg. And now let's check out a couple different fundamentals on the weekly chart, which should give us a little bit more information about this company. So the first thing that I always like to look at is this up-down volume ratio, and it is 2.5. And for me, anything over 1, 1.2, 1.3 suggests significant accumulation. And 2.5 really just shows you that on that earnings report, this really exploded on volume, which suggests that more and more institutions picked up shares, and they view that this company has a very bright future. And after checking out that up-down volume ratio, I like to go down here and get a little bit more detail about those past quarterly earnings. And you can see going back to 2018, nice steady earnings growth and very strong sales growth quarter after quarter. So that's exactly what you want to see. You can see the earnings growth rate is 107%. That's fantastic. And you've got a very strong return on equity of 26%. And for a traditional cancel and pick, you want to see over 16, 17%, and 26% is really fantastic. So overall, in my view, Chegg has very strong fundamentals. And now let's head over to TC2000 and talk about the overall chart pattern. All right, so now that we're talking about the technicals, the first thing that I like to do when I'm checking out a new company is head over to a monthly chart and get a sense of the long-term price action. And I'm basically looking for two main things. The first is that the stock is in a long-term uptrend and has made considerable progress since its IPO, and Chegg definitely meets that criteria. And the second thing is that I want to see that the stock has the capability to double or triple. And Chegg from mid 2017 all the way up to late 2018 went from about $8 a share all the way up to 30. So definitely it has the capability to go on very strong increases in price. So that's excellent. Now that we've determined that long-term trend, we can head over to a daily chart and try to look for entries. And turning on drawings, you can see that the first entry was on the green line breakout that it had on earnings. And you can see this happened on huge volume. You can see that the average is 2.8 million shares traded a day. And on that day, it traded 38.5 million shares. That is not normal people buying. They can't buy that many shares. That is institutions, hedge funds, banks, pension funds buying shares of this company. And when they're behind it, that means the stock is likely to increase in price. So now we've determined that the price and volume characteristics are strong because of this institutional support. We can look for a pullback entry after it made a pivot after running up from earnings. So I've drawn that in, and this is basically a pivot because there's 5 days on either side, and it's kind of a local extrema, a local maximum. And you can see that's at 67.98. So a potential buy point is when it breaks through this price on above average volume or also forms a green dot. And for me, I would kind of buy half a position when it forms a green dot and then half when it breaks through this price. So that's kind of how I'm playing this one, and this is on my watch list currently. And even though growth stocks were hit pretty hard today, it was down only 4%, which relatively to most of my other stocks was hit pretty lightly. And you can see it wasn't on above average volume, so that's also a plus. So that is my analysis of Chegg, and I think this is definitely one of the most promising growth stocks out there at this time. Remember to leave a like down below if you enjoyed the video, and if you have any questions or comments, let me know down below as well. But thanks so much for watching, and I'll see you guys in future videos.